Okay, so if you watched my video yesterday where I said this is bad news for stocks, this is what I meant. This is what I meant. And the funny thing is, myself and my Discord, we were prepared for this from last week. We were talking about this whole Evergrande situation last week and how it could potentially affect the markets. So in my morning briefing last week, I explained the whole situation to my Discord, but I said this, look, but you can never be too certain and thus be prepared for the worst. And a lot of Discord members decided to take profits to build up their cash pile, to be prepared to take advantage of when we see blood. And then I dropped my video on the topic yesterday, making you guys aware. But here is just day one, in my opinion. You know what this reminds me of, right? It reminds me of March 2020, where everything was red. A beautiful, beautiful sea of red. Every sector, every market cap is getting absolutely destroyed. You got large, mega, mid, small. Wherever you are, your portfolio is bleeding today. And if you take a look at this heat map, it's an absolute beautiful sea of red. Even crypto, there's literally nowhere to run. You've seen Ethereum's broken 3,000. All right, we've broken this level of support here and we are now trending lower. It's the same with Bitcoin. Bitcoin is below 43K now. And Bitcoin's about to approach this level of support here. And I'm looking at the stocks in my hypergrowth portfolio. It's just red, 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 red. There is nowhere to hide. And I remember this carried on for like 2 weeks in March. From like around the early stages of March to towards the end of March, it was just a constant sea of red. And it was just constant bad news after bad news. This country locked down, that country locked down, and it was just more red, more red. And we're beginning to see a lot of scare tactics as well. I mean, if you look at CNBC's report today as to why the market was red or is red, I mean, take your pick. Literally at this point, you can just take your pick. Investors fear a contagion sweeping financial markets from the troubled China property market. I mean, we spoke about this yesterday, but we were prepared for this. You know, the warning signs were there from last week, and that's why I made that video on Sunday for you guys to get prepared. So this is a quick plug into my Discord. If you haven't joined my Discord group, the Patreon link is in the description below. Just get involved in the conversation. You know, two heads are better than one. Another reason is the Federal Reserve begins a 2-day meeting Tuesday. All right, and investors are worried that the central bank will signal it's ready to start pulling away monetary stimulus amid surging inflation and improvement in the job market. I mean, just look at this point right here. Like, why would you be scared or nervous of the Federal Reserve tapering? Like, why is that a big concern all of a sudden? It's like the market should not be dependent on the Federal Reserve in the first place. So the fact that investors are worried or concerned that the Federal Reserve will stop buying and propping up the market, and that's a reason to sell, is pathetic. I'm sorry, it's absolutely pathetic. You know, it should never have been the case in the first place. And the sooner the Federal Reserves can get their ugly paws off our assets, the cheaper these assets will become, the more we can buy for much cheaper prices, you know, rather than it being artificially propped up. Anyways, that's my rant over. Again, another reason is the Cironi, and they're talking about because of the D variant remains at January levels as colder weather approaches in North America. Another reason might just be the September effect. You know, September has the worst track record of any month, averaging a 0.4% decline according to Stock Traders Almanac. Fun fact, majority of the biggest recessions that we know in history typically starts around September, October. So I'm not trying to be the bearer of bad news, but that's just reality. Like, if you check your history, most of the crashes have begun in September or October. So yeah. And also they're talking about investors are also concerned about brinkmanship in DC as the deadline to raise the debt ceiling approaches. I mean, take your pick. Whatever it is, there is blood in the streets right now. And the question is, where do we go from here? So in my opinion, majority of my investments are in small to mid cap stocks. So I tend to track the Russell 2000 index. And if you refer back to one of my older videos in early September, I drew this circle here, okay? So we had just seen the Russell 2000 rebound off this support level and continue higher. And we broke through this resistance level here. We just about broke through it. Now, in that video, I said two things can happen. We could either continue higher and test all-time highs on the Russell 2000, break through that resistance and then continue higher. Or I mentioned that this resistance might hold up and we could continue lower and test this support. And lo and behold, that's exactly what happened. We broke through this support level here. We tested it once again on the 14th of September. We bounced off it. And then today, as you can see, this big fat red candle, which is taking us through this support level and also this support level here. So in my opinion, there's enough catalysts, right, to see the Russell 2000 trend lower for the rest of the month and probably into, let me get rid of that, sorry, and probably into the month of October, seeing as October generally is a bad month. Also, we have enough catalysts upcoming, especially with the Fed this week. If they announce they're going to stop propping up the market, then that's going to scare investors a lot more, and you could see the Russell 2000 test this support level right here. Now, depending on the scenario with regards to the Evergrande group, how that plays out, and again how investors take it, I think this support level for the Russell 2000 can hold. As you can see, throughout the year, it has been a key support level dating all the way back to February. So February was when we saw it bounce off the first time, and our portfolios were doing amazing. And then from the mid-Feb, that's when we all started to see that decline, especially in small to mid-cap stocks. And as you can see, it for the whole year, this support level has been critical on numerous times. Okay, so we're approaching this support level once again, and if history is anything to go by, we're going to bounce off it and continue higher. Okay, that's been the current trend for 2021 so far, and for me, there's nothing that I can see that indicates that we're going to divert away from this trend right now. I mean, look, there's always a possibility we could break through this support level and continue lower and then eventually test this support level for the first time this year, but I think it's highly unlikely. Okay, I think this support level will hold up over the next few weeks and months, and then we might continue higher. So this zone right here is loading zone on your high conviction plays. A lot of my positions right now are still in the green. I mentioned in my video yesterday that I wanted to load up on Open Door, Hims, and Airbnb. I did do some buying today, and if you're in my Discord, you know what I'm buying, but I am not buying heavy. Okay, I think it's very important that you be disciplined with your greed and you scale in accordingly. Okay, so use the Fibonacci levels as your guide. Last week, I did a private video lesson for all of my Discord members. We spoke about portfolio weighting and also position scaling. And this is critical for scenarios that we're currently in right now. You need to be able to manage your cash power accordingly, and then also manage your positions and your portfolio weightings accordingly. Because if you get this right, then in the long term, you'll do really well. But if you get it really wrong, then you can find yourself in a position where you don't have much money left and the market continues to tumble. So if you want to get access to this private video lesson, again, my Patreon link is in the description below. Make sure you check that out. But that's my conclusion of where I see us going so far. Okay, I do think it's highly probable that this support level will hold and will continue higher like we've done throughout the whole year. If not, we're going to continue lower and stocks are going to get even cheaper. And then it's a matter of scaling your positions, managing your cash pile, managing your portfolio accordingly. Remember, none of this is financial advice. I'm just sharing my ideas with you guys. Comment in the section below what you think the outcome will be. I would love to hear your thoughts. Let's share some ideas. But for myself personally, I will take the contrarian approach and I will buy when there is blood in the streets, even if the blood is my own. So thank you so much for watching. I hope you gained a lot of value. If you did, please make sure you smash that like button. If you're new to the channel, hit that subscribe button and the notification bell to stay up to date with all of my latest videos. With that said, thank you so much for watching and I'll catch you in the next one. Peace.